G'day everyone and welcome back to another episode of the Aussie Investing Machine. Welcome to the live stream again on this Wednesday night. Thank you all for joining me again in another stream. I really appreciate your support. Lots to talk about this week. We've seen the ASX have a bit of a roller coaster ride over the past few days. We saw a bit of a major drop on Friday last week, which has sent technology stocks into a bit of a whirlwind down, which is unusual. I think a lot of us who've been investing on the ASX for some time now are pretty used to seeing technology stocks go only one way, and that's up. So good evening to everyone. Thanks for joining me. I think today we'll have a look at two companies. One is Lake Resources and the other one is A2 Milk. A2 Milk's just bounced, which we'll have a look at. See maybe if they've reached the bottom. A2 Milk didn't reach the expectations that people thought they would, and they were downgraded expectations. So the company's been suffering a lot of pain. Be interested to know if any of you hold A2 Milk and whether or not you've sold them or looking to buy more. We'll get into that shortly. And then Lake Resources, bit of news out of their Novonix trial. They did a test trial with one of their battery technologies and that did really well. So Lake Resources, a lithium producer based in South America, and they extract lithium from salt brine. So a bit of a different extraction method. We'll get into that. Hey Think Help, how you doing? Good to see you all here. And Pat, thanks for joining us. Back from the ice hockey. Who is playing? Let me know. Is that NHL or is that Russian or Canadian? Yeah, let me know. Lake Resources holder? Yeah, 100%. How's it been going for you? It's had a massive few weeks. They've done exceptionally well. I think a bit of a drop today, but we'll have a look at them. Maybe we'll jump into them first. Oh, it was you playing hockey. Very cool. Is that so it's on ice? It's unusual. Haven't heard of a lot of people who play ice hockey. It's really cool, Pat. Thanks for sharing. So why don't I might just first jump into my portfolio and show you what's been going on for me. Actually made a couple of sales. So I'll just pull that up. You see that? Okay. So my biggest profit has been iShares, S&P 500 hedged, so 17% gain on that. It's been doing really nicely, tracking the US S&P 500. The Vanguard ETF is following behind in second spot, so ETF's in the top two positions, which is an interesting tale. Beach Energy's been doing very well as well. Cochlear, which is one of my recent purchases, is up slightly, 2.8%, so turned out to be a good buy, at least in the short term. Goodman Group has come off. It's been higher, that's for sure. It's still running a 2% profit, which is average. Pushpay is slowly recovering. I think if we have a look at Pushpay in terms of how they've been going, they had that massive drop at the stock split, and then it's been sort of flatlining. It's come up a little bit, but still not where it was, so hopefully they can continue to push up. PointsBet, I just bought at the wrong time. Bought at 16. I thought off the back of their results they would jump up higher. They had some really good results, but the market didn't take kindly to that. I think for PointsBet, everything's looking good. Revenue's doubled, everything I expected, but the market reaction to their results was not so good. But we saw that widespread across the market. So disappointing, down 10%, but hopeful for a rebound there. I don't see any reason why they wouldn't. I really like their fundamentals, very strong in that regard. And I think the market they're in is rapidly expanding as well. Northern Star has taken an absolute beating something to do with the Saracen Minerals merger, and also it was short sold quite badly about a week ago. So a bit of pain on Northern Star, which is not good. Another company that's got terrific fundamentals, and Kogan as well. Massive loss for me on Kogan. 27%. Really hurts. But out of these three, I think these three probably have the strongest fundamentals in terms of growth in the portfolio, and they are the bottom three at the moment. So it just shows you that growth stocks are getting punished at the moment. I've got faith in these guys, so I don't plan on selling. You'll notice a few stocks are missing. Sold Transurban, doesn't really align with what I'm doing at the moment. I sold Kathmandu, don't mind the company, it's just not growing rapidly enough. It was a small profit, but Kathmandu just not in line with the strong growth that I'm looking for. So out it went, and I sold Crown Resorts at a profit as well. Their gambling license in Melbourne is at risk. They lost it in Sydney, yet I got in at a pretty good price. So I didn't end up losing any money on that, made a little bit, but I can't see their future looking particularly bright. They're in a lot of hot water at the moment, maybe very long term, yes, but not immediate. So it'll be interesting to see what you think of that. How often do you reevaluate and sell? So I've just recently done a sort of rebalance video, or one of the live streams I did, talked about rebalancing. So I'm in the process of rebalancing, and that was the stock screening live stream where I sort of went through a stock screen and identified the stocks that I'd be looking at buying. I can definitely tell you what's on my radar. Fisher & Paykel Healthcare continues to slide, and they look really strong. They're on my radar big time. Afterpay as well. It's getting cheaper and cheaper. Has anyone picked up Afterpay? I'm really interested to know. For me, I think it's looking much more attractive than it was. If we look at their sales growth, they really smack around anything else on the ASX. They're a powerful company in terms of growth. They issued some convertible notes. Market didn't like that. Price went down again, but convertible notes are due to be released, can be taken up in 2026 for, I think it's $180. So that's sort of the guaranteed, 5-year growth for those people who took those notes. And what that means is they'll repurchase shares for whatever it was, $160, $170, $180 from Afterpay. So if Afterpay shares in 2026 are $300, for example, those people are getting a ripper bargain. So everyone who participated in that convertible notes scheme is anticipating essentially Afterpay to be way over $200, I guess, if you wanted good value for money. So that's the consensus from those who are investing. So big unknown is that IB belongs to Lilac. Is that for Lake? Let me know. Been a lot of good results from companies and not much movement. Yeah, agreed. And I think this is to do with the inflation cloud that's sort of hanging over everything at the moment. People are super worried. I wonder what the 10-year US Treasury bond rate, what is it today? The daily yields, sort of approaching 2%. Yeah, here you go. So this is as of today or yesterday in the US. 10-year Treasury bond, 1.45. So it'd be good to get a graph, but it's certainly moving. I wonder if we can get a graph. Maybe this will give us, yeah, so here's that massive boost. Can you see that okay? Just zoomed in there. Very stable, and now it's hit a bit of a top. But if this goes up further, people are expecting inflation, and that's why people are worried about stocks that aren't in the black, so to speak, or profitable. So that's the main reason I think that despite strong earnings from Kogan, from PointsBet, from Afterpay, we're seeing falls. People are worried. Tomable, Northern Star's too cheap. 100% agree. I thought they were a good price at $13. Do I top up? That's the question. You know, they're solid company. And the gold price, if interest rates lift, the value of money becomes less valuable. So people buy gold. That's my thinking at the moment with Northern Star. They've been beaten down in price. They're looking like good value. And if this interest rate story plays out and rates do go up, gold goes up. Gold increases in price, or it should, technically. So Northern Star mines gold. Yeah, do you think I should buy more? What are you doing? Is anyone buying Northern Star? Like to know your thoughts, that's for sure. I feel your Northern Star pain. Yeah, I think it's worth weathering. There's nothing wrong with the company. And their merger with Saracen means that their gold fields are just enormous now. They've got so much potential mine life. So, yeah, I agree. PointsBet looks pretty mint long term. Thanks for joining, PC. Always good to see you on the stream. Yeah, PointsBet as well. It's a bit grim at the moment out there, but I think we've invested in these stocks knowing that we're investing in fundamentals and in performance. We're not investing on a whim. It's not a feeling or what someone down the road said to do. So yeah, I think hold on to them. But should say also, nothing in this live stream is a stock recommendation. So keep that in mind. Before making any financial decisions, you should consult a licensed financial advisor. Yeah, Bet, Domable, that's on my list. Yeah, came up in my stock scans. It's way up on the list. Incredible growth. Very similar to PointsBet though. So in terms of diversification, could be an issue, but maybe not. I mean, diversification is worsification sometimes. That's what people say. If you're confident about 3 companies, why not invest in those 3 companies? What is the need to diversify if you're certain in your decision making? And if you diversify, doesn't that just mean you don't know what you're doing? Question, not a statement. Read that a little bit with investors. They sort of, if you've got high conviction about certain stocks, then stick to those. But I certainly don't have the conviction or the knowledge to stick to 1 or 2 stocks. But what would you stick with? I guess that's a question for everyone. If you had to choose 1 stock, not an ETF, and you had to put all of your money that you had in 1 stock, what would it be? It's a good question to ask yourself. Personally, I can't. It's so hard to go past someone like CSL or a bank like the Commonwealth Bank. But if you wanted to be a little bit more risky, who would it be? I don't think I'd put my life savings in Afterpay, would you? Let me know what you think. How do I feel about the hydrogen sector? I don't think we've really got... I've done a video on Hazer Group on the ASX. They seem to be the only real pure hydrogen focused Australian company. There's more in the US, which we've spoken about, like Plug. Hydrogen has a future in the sense that it fills a gap where battery storage can't fill, which is long haul transport, air travel. It will be needed, but I think it's some time off to develop the infrastructure, and it's very energy intensive to produce. Huge amount of renewable energy needed. So I think the short-term game for hydrogen is to use fossil fuels. That's what the Australian government's saying. That's what the chief scientist is saying. So I wouldn't be worried about missing out. I think it'll be clear when a winner is emerging. So that's my feeling. What do you think? The intoxicated investor picked up Xero around 120. Xero's probably the most overvalued company from a purely statistical point of view. If I look at the price to sales of Xero, oh, okay, it's only 21. The PE ratio is very high, but that price to sales is reasonable. If you look at Tesla, I think it's 26. Charts is a good website for comparing these. Tesla's is 23 after they've dropped a bit. Xero is 21. We look at someone like Afterpay. I think it's higher considerably. Maybe not now that it's dropped. Oh no. Oh, that's sad. I thought that was a good resource, but it's making me sign up. I don't want to do that. Although we can see here, is it blocking what it... That's very sad. See what it says, Afterpay price to sales. See if we can get it on Google. 52, yeah, really bloated. Whether or not that's a little bit outdated, I'm not sure. No, that's at 120. 51 price to sales. And then what else could we compare? Just PointsBet, for example. Just as another reference. Let's have a look. PointsBet price to sales 24. So yeah, so Tesla, PointsBet, Xero, all trading around this pretty consistent low to mid 20s price to sales. It's one valuation metric. Yeah. Don't know, that it's hard to judge a company just based on that alone, but looking at that, Afterpay still looks extremely overvalued. Xero, not so much. I take that back. Yeah, might be worth topping up. Certainly think they've got a pretty sweet product. It looks good. International growth available. It's highly scalable. It's a software solution. Good company, yeah. Yeah, so it's still falling. I haven't seen their stock price chart. Let's have a look. Just to see what it's been doing. Oh yeah, okay. 150 was the peak. If we have a look at that on the Yahoo charts, that's what I'd be keen to have a look at. So if we come to the Yahoo page, go to charts, we can well, it's done this automatically for me because I've had it before, but the MACD, the stochastics, and the moving average. So here's their long-term moving average. And the price is yet to cross that point, which is $100, which I think is what you've referenced there. So that's a resistance line. It always is. If it breaks through that, expect it to go down further. We can see here on the MACD, these bars down below indicate oversold conditions. And usually before purchasing in the technical indicator world, we wait until that's the peak of the oversold conditions. We wait until we get to the point where it starts to become overbought, and then we purchase. So that's Phil Town talks a bit about that in his book. You should read that. I link his book in my descriptions, usually in my videos. It's an Amazon affiliate link, so if you buy the book through that link, I get 2 cents or something. So do that if you feel like supporting the channel. But yeah, Phil Town talks about using these 3 indicators not to govern your investing decisions, but to help you mark an entry and exit point. So read his book if you're interested. It's quite a good read. And buy it through my affiliate link if you feel like being generous. Institutions getting back into Afterpay. Well, it's still dropping today. only just getting started. Well, they sold, Eastern and Mona sold quite a lot of money out of the company. BC, how do you gauge whether institutions are buying in or not? The only way I know of doing it is looking on this chart. And we can see on the MACD, it's still been overbought, even though it's been dropping. And it's just starting to become oversold. So I wouldn't be, and the stochastics is trending down, so I'd be waiting. I am waiting on Afterpay. You can see the start of this bar, which is selling oversold conditions. What do you think? What's your... If that's true, institutions are getting back in. I'd love to know how you determine that. Not a fan of the buy now, pay later sector personally. But that leaves more for others, yeah. Well, I've neglected it so far, and I don't think I've done myself any favors for doing that. So I just see Afterpay's growth, sales growth, and it's incredible. So I'm convinced from that point of view. Picked up Lumen US and First Graphene this week. Remind me who Lumen is. Let me have a look. Lumen Tech. Oh yeah, you mentioned this the other week. Communications to rival Verizon, AT&T. Not a great looking price chart, but doesn't mean everything. What's your conviction about Lumen, Pat? I'd love to know. Yeah, it's super volatile. Agreed. Nuix. Is that Australian? Yep. And XL. Analytics and intelligence. It's been smashed. Yeah. Wow. Haven't done any research on Nuix. Might be a good one to look into. Thanks for mentioning. Yeah, okay. Lilac. And Lilac are they a listed company? We're talking about here Lake Resources, battery technology, or graphite technology, not being their own IP and what risk that might pose. Let's just let's jump into Lake just quickly, because it is on the thumbnail, so we should talk about them. They had a big jump, 19%, and that was because of their positive battery test results. And if we have a look, they did a publication about this only yesterday, and it's a partnership with Novonix. So Novonix compared Lake Lithium's product to others, found that it did well. High quality products, improved capacity retention. So this is all key to, I guess, range of electric cars. That would be the end product of a higher purity lithium. So this report was positive, deemed positive by the market. You can go through that. Motley Fool summarizes it here. So favorable test results. This is used in high performance lithium ion batteries. Novonix received commercial samples, and they tested it against Lake's battery cells. Lake's Resources product ended up on top. But at least from this article, I'm not sure how much better they performed. You know, was it 1% better? Was it more? Was it less? It'd be interesting to know. I can't really. There you go. That's a little bit of it. Looks like a watch battery. Yep. So yeah, if you know how much better it performed, let me know. It probably does say in here. Yeah, says it will revolutionize and disrupt the battery material supply industry. So, yeah, not super convinced until I know how much better it does than competitors. I guess that's an important consideration. I'm not looking at Lake at the moment to invest. I just thought it was worth mentioning because it was such a massive price hike. Think Help, you might know more than I do. Do you know how much better the battery is? It's a good question for you. If you can answer it, then hats off to you. BC0 looking very good too. Not sure where the price is going to fall. Yeah, if you just call it that analysis on the price chart, I think that moving average at a minimum would be the go, $100. Yeah. Ivan from the EV stock channel will have a video on direct lithium extraction and E3 minerals using a variant of this tech. Oh yeah, okay, so maybe E3, are they an ASX listed company? Let's have a look. E3 metals, is that? Canadian exchange. Interesting. Agree with you about diversification. Your one stock would be Afterpay. Very brave. Very brave. Mark. Lake, yeah. Think Help, if you could pick one stock only, you wouldn't. Ooh. That's bold statement. You put it somewhere else, maybe into property. I'd like to know your thoughts on that. Very interesting. Intoxicated investor. If I had to put my whole portfolio in 3 stocks, it would be Microsoft, CSL, and Apple. Yeah, good trio. Powerful trio, you know. Don't think any of those companies are going anywhere anytime soon. So, very interesting trio of stocks. We asked a question earlier, guys. If you've just joined the stream, if you had to put all of your money into one stock and one stock only, what would it be? The Intoxicated Investor's done 3 stocks, but I'll let him off the hook there. I think they're 3 pretty good stocks. I guess it's your ultimate conviction, you know. We're talking about diversification and whether or not it's a good idea to diversify, and should you need to diversify if you've got high conviction about a particular stock. So that's the question. What are your thoughts on Adairs? Oh yeah, furniture. Comparable to Temple and Webster, perhaps. Temple and Webster frequents my stock search. They're on my list. Temple and Webster I'm looking to buy, for sure. Adairs, be interested to know. I've heard of Adairs. I know they're a furniture store, but I've never considered purchasing anything from Adairs. But I have considered purchasing stuff from Temple and Webster, but I haven't. I know Nick Scully more than I do Adairs. Have you bought anything from Adairs? I couldn't even tell you where they sit in the market, whether it's a premium product or it's mid-tier. How have they been looking? Yeah, it's reasonable price growth. They haven't been whacked by the latest market movements. They haven't appeared on my stock scan, so I guess it's probably one to look at their fundamentals. Maybe we can do that. Let's have a look. So let's have a look. Financials. Revenue's good. That sort of percentage gain. I need to get the calculator out, but what is that? That's 388 divided by 344. 12%. Yeah, so growing revenue 2019 to 2020 at 12%, which is good. It's not aggressive growth. Are they profitable? Yes. And increasing profitability, which is good. Stagnant earnings per share over 2018, 2019. So that would be the warning sign for me. And a dip as well. The 5-year earning per share growth is, let me tell you, oops, I'll just do that. Oh, I can't actually do that calculation. Not on a simple calculator. I need to plug it into my spreadsheet, but yeah, it's okay. It's respectable. Increasing cash, which is good. Reducing debt, which is fantastic. But a big jump in debt. Massive jump. A capital lease obligation. So maybe that's an expansion. You need to look into why they've spent this massive amount of money. What is that, 78,000? What are we looking at? Doesn't give me a... I've got to assume could be tens of thousands, so could be 780,000 potentially or more in capital lease obligations. So it'd be worth looking at their annual report and finding out what they are. But yeah, I guess it's not, the growth is not aggressive enough for me to be interested at this point in time. Hey Kay, how are you? Thanks for joining us. BC, Gauge, via what I've heard from people, the institutions. Yeah, not the technicals. Yep, fair enough. That's in relation to Afterpay. Lumen was a merger, level 3 in CenturyLink. CenturyLink is the old legacy site and has tons of fiber infrastructure. Oh yeah, so this is Lumen, the up and coming communications provider in the US, which is taking on Verizon, AT&T, T-Mobile, etc. Tons of fiber infrastructure, good management, overlooked because of the CenturyLink side. Interesting. Worth a look, you reckon, Pat? Good growth performance, perhaps. The intoxicated investor couldn't choose one of the three. Equally strong for all three. Yeah, so that was where was your top 3 pick? That was your top 3 pick there. Microsoft, CSL, Apple. Awesome 3 stocks. Let's talk a little bit about A2 Milk, because it is on the thumbnail, so we should talk about it. Let's have a look. So A2 Milk, we can see, has been falling and falling and falling from the high of around $20. Yep. And now we're down to $9.40. It's had a little bounce, but not much. If we have a look at the latest Rask article on A2 Milk, what are they saying? Yeah, so essentially I've heard some news and we've got people saying, is it time to buy A2 Milk, which is the article, the title of this Motley Fool article. And the case is that they have achieved very good growth over the past 10 years, I guess. But they've been heavily reliant on the Daegu channel, which they mention here, which my understanding involves people packing and sending in parcels milk back to China principally, and then also people packing suitcases and flying over to China. That is obviously not happening at the moment, and management is basing their future revenue predictions on when they assume that's going to resume. I don't know how you could predict that. I don't know when we're going to see international travel open up again. Vaccinations are underway, but I don't think Australia is going to be vaccinated until the end of the year. I don't think China will be anywhere near that. So, yeah, be interesting to get your thoughts on A2 Milk. Macquarie's price target is at $9.75, which is about where it is at the moment. If they're basing their future revenue predictions on a resumption of the Daegu channel, then I think that's a risky way to look at it. They should be focusing on other revenue streams. So that's my 2 cents. I was looking at A2 Milk for some time prior to the pandemic, and I think one of the very first videos I produced, I talked about 3 stocks that I thought were at risk of rising tensions with China, and they were Treasury Wines, A2 Milk, and BHP. Treasury got smashed, A2 got smashed, and BHP didn't. I didn't have an understanding that iron ore couldn't be replaced. The supply Australia provides to China could not be replaced by any other foreign country because we do contribute so much. So yeah, that was my prediction. So intoxicated investor, talking about the capital lease obligations of Adairs, which we looked at before. Capital lease obligations were never on the balance sheet of changing the accounting standards. Interesting. So this is it's appeared only because of a change in standards. Very astute observation. The right of use asset that is amortized and a lease liability is recognised. Rental payments reduce the liability now. Not all expense to profit and loss, only depreciate now. Okay. Very astute comment. Thanks for that. I was not aware of that, so appreciate the comment. I think, guys, that wraps it up. It's been a great chat with you all. I always really enjoy these live streams, so good to hear the sentiment at the moment and to hear your thoughts on what has been probably a bit of a painful week since last Wednesday. Certainly a lot of things have been thrown into the mix, but I think at the end of the day, there's a lot of good quality companies which are reducing in price, which presents a buying opportunity. So I said earlier that, I'm sort of looking at Temple & Webster. I'm looking at Afterpay. There's a few companies that are in my sights, and if I do make any purchases, I'll be sure to share those with you. So stay tuned. Videos coming up tomorrow or Friday, maybe. Release a video and then another one on Monday, I think. So that's the schedule. Been a bit busy this week, so appreciate all your support. As always, thank you so much for joining, and thanks for leaving a comment if you did. Even if you didn't, thanks for jumping on. I think that's all from me, guys. So enjoy the rest of your week. I hope it's been okay so far, and have a good night. I'll catch you in the next one. Cheers, everyone. Cheers, Pat. Cheers, Lindo. Thanks for joining, mate. BC live stream on Sunday. Not this Sunday. I'm away, actually, so I can't do one. Video on Monday, though. I'll probably reinstate the Sunday live stream the following weekend, if that's okay. Mona, thanks for joining. So I think you're talking about the Lake Resources test. The impurities, so it's the purity of the lithium. Awesome. Thanks for chipping in. Thanks, BC. Thanks, everyone. I might end that one here. Have a good night, and I'll see you in the next one. Cheers.